Yeah, I'm losing my
Get
edge.
into it. Taking heat in metals, Pete. That is the conversation today. It's an apt one. A lot of people taking heat on both sides of metals in the last 48 hours as we've seen silver climb to $30 almost and then reverse not just 50 cents or a dollar, what might seem normal, reversed about $5 or $6.
Right.
So whether you're long or short or neutral in metals, you've probably taken some heat in the last couple of days or last couple of weeks. So I wanted to talk about what that means and how to reduce taking heat, because it's not a fun thing, right? Like whenever someone says if you can't take the heat, then stay out of the kitchen. Taking the heat isn't like a trip to Disney World, right? It's
No,
not.
and right. It's always we talked. It's a great learning experience because it kind of, number one, we never put on a trade with the idea like, ooh, I'm going to wonder how much heat I take on this. It tends to unfold after the fact, but it's also, you know what, if you do stay disciplined, nobody likes to lose. Nobody likes to be underwater at any point of the process. Inevitably, in the 50-50 world we live in, we're always going to be underwater at some point.
Yeah.
But what's the takeaway? And, Tom has been great, always talking about where's the takeaway in this? What's the takeaway you get from this experience in terms of better strategy, better management, and better trade selection? I think that those are important things. None of us are immune from living through taking heat and things that are interesting. By definition, you want to be in markets that are elastic enough, that are going to give you opportunity on both sides of it. We talked about this. Metals are certainly probably my greatest focus right now over the past month. Most interesting market to me in both directions.
Yeah, and it is this scenario where prior to putting a trade on in a market like silver that's only had 20%, or what did I say here? Since 1990, silver's only moved 20% higher in a week's time twice prior to recent weeks. And you can see the other two of the four times historically that has happened in the last month. So 4 occurrences of 20% moves in a week in silver, 2 of those 4 occurring in the last month. Another one occurring back in 2009 and the other occurring in the late 90s there. And it's this scenario where in all of this mess in between, especially the last couple of years here from call it 2015 to 2020, where we haven't seen much movement in metals and much reason to talk about metals. In that time frame, you're usually sitting there saying, man, I'd love to get burned on this, on selling silver here, just because I want to see the move. And you're almost like wanting, I remember when I first started trading, I was like, I can't wait for a reason to click into something so I can feel alive and kind of like feel what it's like to take risk. And then guess what? It's not so much fun as you think when you finally do see this move in silver, that first 20% up move where it's like, oh man, it got to $20. Maybe I'll dabble with some shorts. And then a couple of weeks later, it gets as high as $29. And you're like, all right, taking heat, not so much fun. But Pete, what's been interesting in the past, these other 2 occurrences in 98, and actually, sorry, it was 2008, not 2009, you saw pretty huge reversals. Definitely something to write home about in the next week and the next month. And while you'd say you're seeing that now in silver, the interesting thing was that first 20% up week that happened right around here was seen. The next one was another 20% up week. So while these stats are great, and you're saying, oh, well, now you're seeing that reversal in silver that you've historically seen. If you got in on the first 20% up move, then you took a lot of heat here before you got back to scratch.
Well, and Frank, this is a case where, you've done a great job. When we're talking about metals, you've started with that longer term silver chart. And I always get asked so many times, well, what frequency do you look at things? And my only advice is everybody finds a time frame that works for them if they do look at charts at all, is to vary it a little bit. Go back and look at context, because you can get very myopic sometimes looking at markets. And you can look at silver vol and realize, well, silver is more volatile than gold. Absolutely. The scope of that volatility, when you look back at that movement from 12 to 50, or how many times we fought selling $14 puts or $15 puts and seeing the market fail and fail from $18, and look what it's been able to generate. I think that context coming back here is really important in terms of the potential of what silver has to do. Now, there are so many traders whose careers never incorporated anything but a range from $19 to $14. So this is as you would say, taking heat. It's very uncomfortable at some points, but every once in a while, it's good to take a little bit of context to realize when markets become more elastic, how do you manage and how much rope should you give something? So I think this is, when you look at those stats around rollovers, and we've done a lot of studies. When I say we, I'm always implying you've done them, and I've gotten the opportunity.
You take the credit.
I've gotten the opportunity to talk about them with you, about sometimes when equities roll over substantially, it takes time. They need to digest that higher level. As much as we know they're overvalued, they won't give ground right away. And you've done some really interesting time series around that patience game. This is a little bit different market here. And I like the fact that we have this opportunity where 20% up was not validated by the statistics you just shared with us in terms of where this market actually went.
Yeah, and now I want to look a little bit, because it is like the last 12 to 24 hours has been almost like a parade for everyone who was short metals. But I just want to get back to what we've seen in the last month here, and what I think at the end of the day is here to stay. I hope at the end of the day is here to stay, which is large outlier moves, large notional moves in these big /SI/GC contracts. And so if you sold that first 20% up move, Pete, you are now back to about a scratch. Right. So congratulations. I say that semi-sarcastically, but I do feel for anyone who got caught up in this without that historical context, Pete. But what I want to look at is, okay, how much heat did you take? How much in losses did you take to get back to a scratch? And the number here for /SI, that big silver contract, was $24,000 in losses to get back to a scratch. And you might say to yourself, yeah, but now I'm at a scratch.
Right.
And I was, of course, showing 10 grand, showing 20 grand, showing 24 grand in losses per one contract here in silver. But I'd rather be back to zero than have taken a $300, $400 loser and been flat through all of that. Right. I don't agree with that. And I don't think that I mean, you can do whatever you want, but that is not a long-term sustainable process to take $24,000 in heat to get back to scratch. I would every day of the week much rather take a $300, $400, $500 loser in silver. You sell this up here, and then you get the move through you again for a couple $100, and you say, all right, I lost, I'm wrong, I'm out. And you don't sit through this, because once again, and I think we're going to be seeing this a lot in the future, and that's why I bring it up now, right, that metals has reversed, is when you're in the midst of taking this heat, Pete, all you are hoping for, you're begging for
scratch
is to get back to scratch, or that you had gotten out early. Yeah. And you take a $300 loser here, $500 loser here, Pete, and you can sell higher values. It's when you do that, the game isn't over. But when you take heat for 24 grand, the game is over for you.
Well, and you know what, Frank, we always talk about choices. You want to afford yourself as many choices as possible. When you start to invest 10, 12, 14, here, 20, let's not go from low to high, but $12,000 on one side of the market, you've just eliminated pretty much everything you can do except sit there or take the heat. You can't trade both sides of the range. Who would buy them up there when you've taken $12,000 worth of heat? Who wants to sell more? I probably overcommitted more capital to this trade already. Can I take advantage of the expansion of premium because we've moved outside the range? No, because I've already got enough static short deltas. I can't add anymore. Once you get to that loss point where you don't have, I always say, being able to trade both sides of the market. And it doesn't mean you're flipping yourself around from short to long all the time. You don't churn yourself, but you've got to manage those losses so you have the ability to trade both sides or sell premium or trade neutral premium. Once you remove all those because of the dollar number, you've really engineered the no-win solution. So I think this is this is a textbook example of rarely do we get that very parabolic move from 20 to $25, a tiny pullback, and then that explosion slash expansion up to almost $30. And this is a cautionary tale around management. If you had a short bias through all this, would you be down money? Absolutely. No one could thread the needle that well.
Sure.
But where you would be right now after a $5 pullback in 2 days is in a very comfortable spot to trade both sides of this market and take advantage of 65% IV rank.
Yeah, and I'm glad that you used the word comfortable there, because another way to reduce the amount of heat that you're taking, reduce the amount of uncomfortableness, is using a product that fits you more. I mean, I've even gotten emails about the extent of SPRE, which is something that was constructed to be small for the individual trader and investor, about that being large. And the heat that you would have taken on this was only $800, which is still a lot of money here to get back to scratch. And once again, I would advocate for being more active and saying, okay, well, if I sold these 75s and I was looking for a reversal of 74, 73, then I need to be taking losses at 81 or 82 and not taking $800 worth of heat up here. And if you're not of that mind, at least drop down the size and use a market like /SPRE that has the same movement here. I mean, Pete, this is the same exact two outlier moves to the upside and then the big reversal here, but heat of $800 in the same time frame that you would have taken 24 grand in /SI. A lot more manageable if you are going to. And like you said, this isn't a segment that's trying to say, okay, never take heat ever, because you're going to.
Well, then you're never putting on a trade.
I don't think anyone, maybe 1% of my trades ever, I've bought or sold something and it's never moved through those prices. But yeah, this is something you could do that's at least a little bit more manageable. And then a last note here is just that I don't think we're necessarily out of the woods in terms of the silver movement, gold movement, and small precious metals.
I know. Yeah. This is great.
Because you see these clusters of volatility here in 2008, 2009, these big moves that tend to cluster around, and we're, I think, just seeing the start of it. So that is your segment on taking heat in metals. I hope that the volatility continues here. I hope that the heat taking lessens and the kitchen gets less hot with these different strategies and different products that are smaller.